To what's been happening on the local market now, and earlier I spoke to Martin Lakos from Macquarie Private Wealth. Well, Martin Lakos, as we reported, the Reserve Bank Governor has been out and about in Brisbane today. What did the equity market think of his address?
Yes, look, Glenn Stevens was speaking at the Economic Society of Australia over lunch, and certainly the Reserve Bank's main focus continues to be the mining investment boom. And despite the weaker numbers in the non-mining sector of the economy, it does appear they still have a focus on tightening monetary policy. Now, they did talk about the inflation data. Now, the next data is out in July. That looks at the June quarter inflation data, and if that's outside of their boundaries, they will be raising rates in August. But we have to watch that pretty closely. Well, for the market, it was a very disappointing performance, given that we had a very strong rebound yesterday and pretty solid numbers from overnight markets with Wall Street up. We closed down 18 points. Most of the sectors were down in line with about a 0.4 to 0.6 correction. Lower volumes, but it just doesn't appear to be the conviction to the market on the upside just at this point in time, although value does seem to be emerging in the marketplace.
Now, to stock-specific news, how important for Asciano is its new coal haulage contract with BHP Mitsui Coal?
Yeah, look, this is a really good contract. 4.2 million tonnes to be moved on an annual basis starting in 2013. It certainly gives a lot more certainty on earnings for Asciano post-2013, and it's certainly viewed as a sizable contract, particularly a reinstatement of Pacific National's position in the whole rail coal-moving business. So pretty good news. The stock was up about 3 cents to 154.5.
And still on resources, Rio Tinto, it seems, is moving to speed up its Pilbara iron ore expansion. That must be pretty exciting for investors too.
Yeah, this looks like it's about 6 months ahead of schedule. They're spending about $350 million on early works and procurement for the expansion of rail and port works. It does mean that once it's fully installed, this whole expansion will mean they'll be producing 333 million tonnes per annum. Now, with that looks like they're going to complete that 6 months ahead of schedule, and it certainly is very bullish for their outlook on iron ore.
And what about QBE? How have those shares reacted to the company's profit warning, which was issued in the market after the market closed yesterday?
Well, this is sort of a pseudo-profit warning. There's no doubt that they've noted that for the past 5 months they've had abnormal catastrophes and accounting for well over half of their reinsurance provisioning and what they've got in place. They did note, however, that the premium income is rising, investment income is rising, and premium prices are also rising, and they're keeping their dividend steady at 62 cents. So on the one hand, clearly some abnormal catastrophes that are impacting them. On the other hand, the rest of the business seems to be looking quite good. It doesn't appear their insurance margin is going to remain intact in that 15 to 18% range, albeit probably at the lower end of that range. The market, however, didn't like some of that news that came out late yesterday. Stock was down 63 cents to $16.65.
Martin Lakos, thank you for all of that.
Thanks, Tiki. Always a pleasure.